Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello friends, checking in on a little trade review for SPY and Roku while they're still fresh in my mind as they just happened. So first off is the premise. I have not had clarity of short-term direction in the last 2 days. And it's very important to recognize that in ourselves. And a lot of people struggle to do that because we have to stare our ego dead in the face and say, I don't know. And that's perfectly fine. We have to be able to do that so we can take our foot off the gas and trade less when we are less certain of short-term direction. My most confident trades are when my individual ticker, whatever it is going in the same direction as SPY, and SPY has the tech sector and the financial sector, the two major holdings going all in the same direction. It's like a boat on a lake and all of the wind is at the sails. So if we don't have that, which we haven't had the last 3 days, the tech sector is on fire and the financial sector is dropping hard. That's a bit of a tug and war. It's a less clear setup for the market as a whole. And when that's happening, I trade less. It's just an automatic trade less for me. So that's been my premise for the last 2 days. I am unsure of short-term direction. So we started this morning on SPY with a drop. And I had a bit of a bearish bias this morning looking for the potential of the 6-hour head and shoulders pattern that I pointed out in yesterday's video for potentially following through today if we broke the low of yesterday and the low of extended hours. We came close, but we didn't break it. So we started the morning with a dump. The QQQ bulls held the hourly uptrend and SPY held the low of yesterday by 21 cents. When the bounce started, we changed the 5-minute trend. As soon as the 5-minute trend changes, I say, okay, bulls have proven themselves on this bounce. They have proven their hold of the low of yesterday. And now I zoom out to the 15-minute time frame. And I say, what's the most likely scenario on this 15-minute chart? And for me, it's to look for a lower high and a tightening range. This is what I anticipated as the most likely scenario on the 15-minute chart. So my game plan was scale into weakness, to look for, scale into the bounce, scale into strength, to look for that lower high. The first signal, I was going to look at two positions. The first would be a loss of the 2-minute uptrend. And we had this little higher low, lower high, lower low. I made one entry there, which in hindsight was certainly too early, but that's why I save a second entry to even my average out. So first entry, 277.97 for a short. Second entry, I then went and checked the greenhouse, came back, had a stop in place, of course, and at that point the price was in the 279.30s. So I entered another short at 279.28. At that point, my average is about 278.62 and a half. Let's call it 278.63 is my average on that short. And there's, you can see ahead. So what I then said is, okay, I'm in my full position. My stop is over the high of the day. Because of the size of this bounce, bulls have favor, absolutely. This is not the equilibrium that I was looking for. Because we made it all the way back just under resistance, bulls have favor. It ended up being a very quick higher low and higher high. You could call that a cup and handle on the 15-minute time frame. But I ended up saying, okay, that's stronger than I thought it would be. I'm taking half of my position off at break even, which is here's me covering half that position at break even. First entry too early. Second entry was a good one, top fishing the high of the day. Third exit, or the third trade, is my exit of half, dropping my risk in half. So at that point, I then kept my half a short at the high of the day stop, and I was stopped out. So I was stopped out for a loss. In the end, the loss was on a half position and about $1.20 loss. So very small. I can certainly accept that loss, and that is a way that I recognize I'm wrong, and I limit my losses by maneuvering around positions. So that was the trade on SPY. We'll see if the SPY bulls can hold a 15-minute higher low of 278.25. Then I was on to Roku. I was watching Roku, huge bull move on the 2-minute time frame. Just a massive move. We know consolidation is due on longer term time frames, but I was watching SPY and Roku at the same time because there's definitely correlations to be watching. So I was watching the 2-minute time frame and I said to myself, okay, as long as the 2-minute 12-period exponential is support, I have no interest shorting it. And that was our guide. We then pulled back and lost that support level. That triggers my attention. Okay, that support has been lost. I was sitting here watching this looking for a bearish entry. At a certain point, I said, okay, we pulled back 6 red candles in a row. We're still in a 2-minute uptrend. We're seeing 5-minute consolidation, looking for a 5-minute higher low to form. I was looking bearish, but I'm going to go bullish. So I entered a bullish entry on Roku, 128.43. So 128.43, which was near the low, had pretty good timing. The low of that consolidation was 128.25. So entered my position knowing that I was looking for a 2-minute lower high. I was looking to short that 2-minute lower high. Originally, that's why I had my attention. Flipped my mindset to bullish because I liked the risk to reward setup, looking for the 2-minute high or low. Scaling in and out. Cannot stress the power of what scaling in and out has done to change my trading game personally. So I was in my position, I scaled out half with $1.02 gain. At that point, my break even on the trade is 127.40, and I have no risk because at that point, my stop is under 128.25, because if we break that level from there, we are then in a 2-minute downtrend. So I waited a little bit longer for the bounce to keep going, and I sold the second half 130.05. In the end, that ended up being a trade from 128.43 to an average of 129.72 or so, 129.70s. So a solid 1% gain. So that gave me a little bit over a half a day maker, pretty much a 65% day maker there. So then I said, all right, well, I'm back to looking short, which was the original reason I was watching for a bearish entry here. And I entered short. So here's my short, 130.65. And again, pretty decent timing. The top was 130.89. As soon as I entered 130.65, my stop goes over 132.40. And at that point, my risk is pretty much I'm giving, if I get stopped out of this trade, of the short, I give back the gains that I just made and then have another tiny loss. So again, very good risk in my opinion, risk to reward. So I'm in at 130.65. I exit half at 129.42. So a $1.20 move there. And again, as soon as I exit that half, I'm riding free. I cannot lose on that trade because my stop loss at that point doesn't take away all the profits that I've locked in. So I then locked in the second half, 127.78. Why was I confident in this 2-minute lower high? Number one, at that point in time, SPY was just looking for a 5-minute lower high right here. And I had that at my back. Why did I exit the second position? Because I was just looking for a SPY 5-minute higher low as well. So SPY helped gauge when I want to enter and exit. And on Roku, the second exit was 127.79. So in the end, that trade ended up being short from 130.65, and the average cover price was 128, I don't know, 128.60s or so. So it ended up being a $2 trade, which is about a 1.5% trade. In the end, these two trades gave me a 1.75 day maker. So the loss that I took on that SPY short was perhaps a, oh man, that was only maybe a 15% day loser. So now I've got a 1.75% day maker and a 0.15% day loser, and I'm up a 1.5 day maker on the day. So that's where I stand. That's all the trades that I've taken today, and I'm going to patiently wait for more clarity, but just a little insight as to scaling in and out, using SPY for some correlation guide, and also using shorter term time frames and limiting my risk to stay very small. When I'm wrong, I'm smallly wrong, and when I'm right, I can be solidly right. Hope that was insightful and helpful, and hope you have a good rest of your trading day. So another trade on Amazon here, and shout out to member in the chat room, JFig, who posted, hey, Amazon is in straight up free fall from the all-time high, and that told me definitely time to be scouting a bounce. What SPY was doing was very important to me. When we see a free fall like this, potentially in reaction to news, maybe it was Como in New York saying that we are going to see the extension locked down till May 15th. Whatever the reason, when the market does this, everybody correlates. So I'm not going to be looking for Amazon to bounce off a support unless it's a very clear level like a low of the day. We weren't coming up to the low of the day on Amazon. I played an Amazon bounce based on the SPY low of the day support. So SPY is in free fall. The low of the day held the low of yesterday by 21 cents, and I was anticipating that that low of the day could hold again. So I played Amazon based on that bounce. So I looked at Amazon. It was in free fall, as JFig said. I looked at the 15-minute chart. I said, I'm looking for a 15-minute higher low. There was one support at 23.56 to be watching, and we did end up bouncing within a few dollars of that level. But I began scaling in, again, not expecting to nail the bottom. That's why I reserved multiple orders. I don't think I'm just going to nail the bottom in one trade. I made my first entry at 23.68. 23.60, we'll call it 23.69. And I made my second entry at 23.55. So my first entry a little early, my second entry on point. After I had those two entries filled, I then put my stop under, let's call it 23.40. If SPY had dropped through the low of the day, I would have stopped out of this position before the bounce took place, and I would have eaten that loss. Fortunately, SPY held the low of the day, and the bounce started. At that point, because I had a full position of what I was willing to take on, I wanted to exit some of that real quick to, again, put myself in a no-risk position. So at that point, the bounce, I exited half at 23.66, which was pretty much, at that point, I exited for a $1 or a $2.20 loss for my first entry, but at that point, the price was much higher than my second entry. So that puts my break-even price at 23.57.50. We'll call it 23.58 is my break-even at that point. So I can put my stop at that point under the low of 23.53 and have a tiny risk. We then saw a significant bounce. I exited the second half too early at 23.77, but at that point it was a day maker. So locked in my day maker, and at this point it would be a multiple day maker, so a little bit quick on the draw to exit, but that's all right. And now we're at a 2.5 day maker on the day. Monday was a 3.5 day maker. Yesterday was 2 trades break even. So in the flow Monday, out of my flow yesterday, so 2 tiny trades, tiny win, tiny loss, done for the day. And then today, after lacking some clarity, I started with a tiny loss, solid win on Roku, solid win on Amazon, and that's how I constantly keep my losses small and have consistent, solid wins to keep that account moving in the right direction.